Good morning, my predicted trades family. Hope everybody's doing well today. Man, what a crazy FOMC that we got yesterday. We basically went nowhere and we're stuck in about a 10-point range for most of the day. We pushed up into FOMC to give a big dump down and a new low of week. Then we pushed off of that 38.43 all the way back to a new high during cash sessions, at least, back to that 39.22. Then we rejected down to new lows again on the week and down to our 38.07, closing kind of right at 3800. Overnight, you can see we drifted down to our next key level, 37.73. And now we've worked our way back up right near where we closed. So basically, opening flat. We do have some economic data coming out today. Pull that up. We have our initial jobless claims. We have account deficit and 10 a.m. some leading economic indicators. And then tomorrow we have manufacturing PMI. And looks like we have a little bit of Fed speakers tomorrow with Brainerd and Bowman. So just a couple of things that are coming out today and tomorrow that could have a little bit of an impact. And overall, where can we go from here? You know, all of Wall Street is very short. We could see that in yesterday's drop. We know, a large percentage of Wall Street was already short, right? And after that drop yesterday, I'm sure everybody loaded up short for the rest of the week. And now we're kind of bouncing right back. Can we push right back up where we were, trapping all those shorts and squeezing them into the end of the week? Absolutely. We have totally had FOMCs that crater and the next day shoot back up. We've also seen FOMCs where we take off to the moon and then come back to Earth. So I'll always be ready for the potential reversal after FOMC. We'll see when that economic data comes out at 8:30. It could push us for whatever reason back up to a gap up. So overall today, we have basically no squeezes in place on the indices after such a hard drop, falling out of our 4-hour squeeze. For today, basically there are 3 levels here that I'm looking for us to hold for support for an upside move. If we give out those 3 levels, we have levels to the downside. But let's see if we can hold this overnight trend line. We have this 37.91. That is a daily Keltner, second Keltner to the downside. Let's see if that 37.91 can push us back over 38.07, sorry. And then from there, looking to get back to our levels that we were at yesterday. This 38.43, 38.55. Beyond that, the daily 8 has now stepped down near that 38.85. And we have our first Keltner now overlapping our 38.78 key level that we have interacted with all week. To the downside, if we start to give out 37.91, Then we're down to 37.73 for a retest, the overnight low as well. And then past that we have 37.41 and 37.08, where the third Keltner sits. And that cycle of 3,700, right? So we've got targets to the upside, targets to the downside. Let's hope that it's not just a sideways day. NQ. NQ fought up to that key level, 12,100, and then dove to our next big key level, that 11,677, closing right near it and the second Keltner to the downside. We're having a decent little gap up. Currently, yeah, hold $2 right now. Let's see if this 11,677 key level can provide us support. If we can get going back to the upside, 11,800, kind of that pre-market high, is the first test where we basically last Friday's low, right? And where we kind of pushed off from on Monday. If we can get through that 11,800, next step would be obviously, like 850, 900, and then we have that daily Keltner and daily 8 now stepping down to 950. And a goal to get back to that 12,000, 12,100. But if we continue to give out and give out this 677, then it's to 11,600. Then 550, the overnight low. 11,500 is going to be a very key psychological level. If that gives out, then down to that third Keltner at 11,300, we can call it. The ready. Well, the ready made it down to that second Keltner overnight, catching a bounce there at that 1746, 47. Let's see if we can hold our overnight low. If we can start to take back off, 1780 is going to be key. It's kind of where that first drop stopped and bounced us back up above 1800. So yeah, 1780, and then that first Keltner, 1793, 1800, and 1805, where that daily 8 sit, all targets to the upside if we can get a rebound. If we start to give out 17,060, then it's back to 50, this 46 for a test, and past that, way down at 1,700 is the third Keltner. YM. Let's see, right now YM and ready trying to lead to the upside. There's YM. There we go. Yep, YM ready leading to the upside right now. Which is okay, because YM has been a little weaker lately. Got up to that 31,000 yesterday, and here we are. Not too far from 30,000. You can see we bounced pretty much there overnight and pushing nicely to the upside. Let's see if the second Keltner to The downside can provide support at around 30,290, 30,300. If we can push off of there, looking to get back to psychological level of 30,500 and 600, which was kind of the base that we were setting in. And further past that, looking to get up to this daily 8 and first Keltner, which sit up near 890, call it 30,900. We were holding 30,900 yesterday, leading into FOMC. If we start to give out to the downside and lose this 30,300, this first Keltner, then we're probably going to cascade through 200, 100 to test 30,000. Below that, our third Keltner sits at 29,682. Apple. Apple made it to the 21, the daily 21, this white line. It did give out, but you can see it kind of just fell back to this zone, which has been what we rocketed up to on Monday, where we held and pushed higher on Tuesday, and we're still kind of at that zone, pre-market. Let's see if ultimately Apple want to see it stay above, call it this 152.5, 153. We could have a little dip, but if we can hold there, looking for Apple to get back through this zone to the daily 8, which sits right at the top of that zone, and start to push back up above 155 to recover. But if Apple rejects this zone and starts to take out 153, 152.5, then likely coming to 152, 150, and back to this 149 key level that we pushed off of on Monday. So overall, let's look around at these individual names. We know that the market went for new lows, but the individual names that try to lead us to the upside, not so bad. So we've got our targets upside and downside on Apple today. AMD. Now, here's a good comparison to show that AMD, which was already weak, in that drop did get down to set new lows. Still in a 4-hour squeeze on AMD. Let's see if it can continue to hold 74, push back through 75 to get to 77. Now we have a little bit more room to play in, where those squeezes used to be tighter. If we give out that 74, then we'll cascade down to 72, where the third Keltner sits. Amazon did head down for new lows. I'll say that last drop in the day just cratered Amazon down to new lows of week. Let's see if we can continue to hold 117, 118. Push off of that to get back to 120, 122, 124, where the daily 8 sits, and that first Keltner. If we do keep slipping and give out 17, then we're coming to 115, 114, where that third Keltner sits. BA was doing a great job holding this trend line. Obviously, FOMC shot us down but we haven't set new lows from last Friday. So let's see if we can continue to hold 141.5, 142 at the bottom of this squeeze. Looking to push back up through 145, 147, where the daily 8, daily Keltner sit, in a bid to get back to that 150 at the top of the squeeze. But if we start to give out 142, 141.5, first stop 140, and then that third Keltner is down at 136. While we're waiting for CAT to load, one thing I'll note, Monday we had our, so these are all moving averages, 45 moving averages from different time frames. You can see the 15 and the 30 here. That on Monday we got above and turned into support, but then the rest of the week, the 15 and the 30 were resistance. Yesterday, before FOMC, we got above them and they turned into support and were trying to push us higher. Obviously we've dumped, but I only pointed out to say, right now pre-market, we're already at them, that 15 and 30 minute 45 MA. If we can quickly get above them at that 38.18 and turn them into support, that lends to the push higher to try to get back to the higher time frame moving averages, the 1 hour, 2 hour, 4 hour, etc. And that 4 hour now sitting up at 3,900. Yes, things to keep an eye on. CAT dumped down to the second Keltner. Let's see if we can continue to hold 171.5, 172. If we can push off of that, looking to get back to 175 and 177.5 on our way to 180, where the daily 8 sit. If we start to give out the overnight lows, first stop 170 psych level, and then 167, where the third Keltner sits. Google. Got below 100 yesterday. Made it to that third Keltner overnight. So let's see if that can continue to hold. That third Keltner at about 98.5, 98. If we can push off of that, looking to be back through 100, back to 102, 103 where the daily 8 sits. And our daily 21 has come down to about 107, which we have not seen in a couple of weeks. To the downside, we're at third Keltner. So if we start pushing past that, we're a little oversold. And I'd be looking for those psych levels, 197.5, 195. Or sorry, 97.5, 95. GS. Come on. Let's see, GS. Tried to hold or dumped back to that 320. Set some overnight prints a little lower, but we're already setting some prints back above 320. So ultimately looking for that 320, 319 to hold. Bottom of these squeezes, this daily squeeze, to start, if those can hold and start to push to the upside, looking back to 322 first, 324, 325, and then up to 327 where that daily 8 sits. In a bid to get back to all of the daily 21, daily 50 that are overlapping at the top of this 4-hour squeeze. We have a 4-hour squeeze at the bottom of a daily squeeze. Can lend to a reversal. To the downside, if we keep losing 320, 319, We have that second Keltner sitting around 315, and that third Keltner down at 306. Overall, holding up well near its moving averages. And one good day could push us right back to the daily 21. So yeah, JPM. Oh, and it goes without saying that on a lot of these names, POC is way up above now after that drop yesterday. So we do have POC as a magnet on most of these names. And on JPM, it's right back up at 116 where the daily 50 sits. So let's see if we can continue to hold. 112, 112 and a half. At support, start to push our way back up to 115. At 114, that used to be lows. 115 where we were trying to base, and 116 where all of the moving averages are stacked in a very, very tight range. We also have a daily squeeze in place on JPM, so finances in a daily squeeze and near the bottom can reverse and send them to the top. Meta. Let's see if we can hold 140, 140 and a half. And start to push back up to 144, 145, what used to be the base, and a bid to get back to 150 where the daily 8 and first Keltner sits at the top of this 4-hour squeeze that is still intact. If we give out 140, that third Keltner at 138, and a psych level of 135 below. Microsoft. Microsoft made it down to third Keltner and printed a hair below. If we come down and take out that overnight low at around 237, we've got a key level at 232.86, call it 233 if you want. That would be the target to the downside should we give out 237, 235-ish. But if we can hold that third Keltner to the downside, push off of 238, looking to get back to 242, kind of the low end of the range we were in. If we can push past 242, looking to get to 246 and the top of this 4-hour squeeze where the daily 8 has now caught up to. Netflix. Netflix, which has been very strong, just pulled back to the daily 8 on that drop yesterday. I just saw a question come through in the YouTube chat asking, what is a Keltner, please? Keltners are basically, if you see this white line, that is the daily 21. The mean, as we call it, the daily mean on any name. A Keltner is basically a standard deviation away from that mean. So on one day, we can move from the mean to a Keltner on a normal move. For instance, Netflix has an ATR of about $11. So it can move from the mean at 230 up $11 to 241 where that first Keltner sits. We track those Keltners just because once we start to get near the third Keltner, that's getting overbought or oversold, depending if it's up or down. So we track those daily Keltners because they can be where we arrive to and take back off from. So hopefully that was helpful. If you want to know more, join our Discord. We teach all about these things. But it's just, a standard daily full range move how far can we go? Netflix made it back to the daily 8. Let's see if overnight lows in the daily 8 can provide enough support for Netflix. It's also where we took off from Monday's low around this 236. So let's see if that can hold. Start to send us back through 240, 245, all in a bid to get back to 250 up at the top of this squeeze. But we are at the top of daily squeeze. We still have our 4-hour squeeze intact. Looks like the bottom of that is down at the daily mean. So if we start to give out 235, 234.5, we can make it down to 232, where that daily 21 sits. 231, 230 at the bottom of this 4-hour squeeze. Below that, we have the daily 50 at 226. NVIDIA. NVIDIA had a nice breakout to the upside yesterday, made it all the way to 140, got above that daily 15 and that first Keltner, dumped all the way back to that second Keltner. Catching a little bit of a gap up off of that, near that 130. So basically looking for NVIDIA to hold that second Keltner around 130. We have the bottom of a daily squeeze here near 128 as well. I'm sorry, bottom of a 4-hour squeeze. Although we do have a daily. No, I'm sorry, we don't have a daily. I was reading that wrong. So, NVIDIA. Let's see if we can hold above 130, 132, start to push off of that. Back through the same move we did yesterday, 135, 137, where these 15 and Keltner sit, up to 140, and a bid to get back to the daily mean at 144. If we continue to slip and lose 130, then it's down to 128, 126, that recent low. And any further, we have that third Keltner to the downside at 123.5. Come on, toss, don't start freezing on me. There we go. Q, Q, Q. We have pocket 289 and some change. We were trying to hold above that yesterday, going into FOMC. Obviously, we dumped down to a key level, 280. And caught a bounce to the cent. We have our third Keltner just below that at 277. Let's see if 280, 282 can provide support. Looking for us to get back north of 285 and 286, what was kind of the base for the last week. If we can get through that, we could go quickly back to 290. 292, where that daily 8 sits, and that first Keltner. Past that, we have 295, where the daily 15 sits, and 300, where that daily 21 sits. To the downside, if we start to give out 280, we've got that third Keltner at 277. Psych level 275, 270 would be next. I'm not interested in Roku or any of that. SPX. SPX. Looks like our little gap up is fizzling. That economic data came out. Let's see if we update. Looks like a potential slight uptick in initial jobless claim. No. Yeah, slight uptick, but underneath the forecast. And it looks like our continuing jobless claims is going down. So a little bit of a mixed report. Let's see if we can continue to try to hold that low at around 37.90. It looks like we're probably going to be opening a little bit near that. Let's see if we've got a 2-hour squeeze here that'll still be intact. So let's see if that 2-hour squeeze bottom at around 3800 can be support. Looking to get back up to the lows around 3830. And ultimately looking to get back up to around 3880, 3890, where that daily 8 sits. That daily 15 now catching up with our key zone up at 3930. If we keep slipping that third Keltner down at 3738, 3740, and psych level 3700. SPY. So yesterday we finally gave out this zone around 381.5, making it down to 374, that next key level, and now working our way back up. If we start to give out 376, our last little bounce point here pre-market, we can come back to that 375, 374 for a retest. We have the third Keltner just a hair below that at 372. Might be stepping down closer to 371. If we can get going to the upside, looking to get back to this zone from 380 to 383, that key level 381.5. If we can get north of 383, back to 385, in this zone above that we rejected. I had these two zones drawn. You can see we arrived here last Friday, and for a week we've just been stuck in between those zones. So let's see if we can snap back up and get in between those zones. If we reject, we can roll back over and test that key level 374 and that third Keltner, and ultimately that psych level of 370 if we roll over. Tesla. All in all, Tesla held up pretty darn well, only falling back to that daily 8 and that psych level of 300. Let's see if 299, 300 can continue to provide support. Looking to get back up to 306, where that first Keltner sits, and beyond that back to 310, 312, 314 at the top of this 4-hour squeeze, which is still intact. The bottom of that 4-hour squeeze is down near 296, 295, where the daily 21 sits. So if we do start to roll over and take out 300, 299, I'd be looking for us to get to that 295 daily 21. And below that we have, I think, the daily 200, yes, daily 200 and daily 15 overlapping at about 293. Should we start to give that out this week or next, then it's back to the daily 50 down at 285. Which would kind of still be above the most recent lows in this very strong drive that Tesla has been having. UVXY. Obviously with the drop yesterday, skyrocketed up to 11 and hit the top of this daily squeeze. I do have a little zone here that I created that I've been saying all week. I want to see UVXY reject this and start rolling over so that we can see some upside in the market. We're at that zone, pre-market. So, for upside in the market today, looking for UVXY to get back down out of this zone, get back below 10.5, and make that journey back to 10 in all these daily moving averages. If we're going to see further downside in the market, we'll likely stay above 10.5 on UVXY, that pre-market low, push through 11, and start to head higher than this week's highs around 11.2 to get to that 11.5. On VIX, on that drop yesterday, it dropped so hard and fast on FOMC, we saw VIX shoot up to 30. It got halted for 5 minutes and then dropped right back down. Overall, you can see we are still under 28. That is the current resistance on VIX. Even pre-market, we're rejecting it. So, for upside in the market today, looking for VIX to stay under 28, go back below 27, and make its journey to the bottom of this 4-hour, 2-hour squeeze, back down at 26, 25.5, where the daily 21 sits. But if we're going to see further downside in the market, VIX will likely stay above 27, take out 27.6, 28 in a bid to get up to the top of this daily squeeze around that 28.8, 29, 29.21. Those are 3 key levels that make a zone that can be the target if we see more downside. VIX will get up to here. So that's it for today. Hopefully this was helpful for everybody. Thanks for tuning in. We'll see everybody in the chat. It is Thursday. It is our free day. So if you're new to predicted trades, you can join our Discord server for free. You can come in and test out our tools, which plot key levels on your options charts. We had amazing trades yesterday off of our beast levels. Oh man, I think one of the SPX contracts went 250 to 50. So it meant more than 10x. Just amazing edge is provided with our beast system. And you can come in and test it out for free. We kind of put our money where our mouth is. We let you come in and test the tools for free. They'll only work for today and tomorrow. After that, they won't. So, definitely come check us out. We'll see everybody in chat today. Good luck, folks. Remember, no beast, no feast.